The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 9th wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, we're going to look at the circumstances of the bulls and the bears, the buyers and the sellers. We'll try to figure out what it is that they're communicating to us. I'm absolutely grateful for your presence here today. Now, I'm here to serve you. It's as simple as that. So feel free to pick up that phone, send an email, however it is you'd like to get in contact with my phone. It's 877-927-6648. Of course, internationally, you can call us at 727-445-1044. This is Wonderful Wednesday. Of course, it's the Hotel California, sponsored by Tiger Financial Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 9 points, so we can call it flat at 16,502. S&P is up 2 points at 1971. NASDAQ Composite up 14 points at 4826. Russell 2000 completely flat right now, trading out 1161. The DAX finished the day up 32 points at 10,303. The FTSE was up 82 points at 62.29. Goldilocks back $19 right now at 11.02. Silver off 17 pennies, trading at 14.58. Light sweet crude off 88 cents, trading at 45.06. Now, let's see. Yesterday, during our hour together, I said that if the Dow were off about 200 points, then what you would see is what you would potentially see. I might have said see or potentially see. Doesn't matter. What you would see is the high that you won't see again. Well, you won't see again for a long time to come. It's a high that will. It's the high that you would take a look at that would take you into the February to April timeframe in 2016. Now, I know that blew most people's minds away just simply because of the emails that I got out there. And when we got up this morning, the Dow futures were actually up 200 points. In fact, they'd gotten up to 216 points at the high overnight. Dow futures right now, they're up 37 points. So to one sense, and it could be prophetic, not pathetic, but prophetic out here, because we do have at least a 200-point decline, or close to a 200-point decline since that statement. But nonetheless, regardless of the soothsayer ability of Stevie here, let's go see what these markets are doing. So where do we want to start? Well, one place, I was just doing a little bit of analysis before I came on the air, just trying, because yesterday, as I took a look at, let me backtrack like this. Let's take a look at early this morning as the market had opened. Here are the summation indices, the price oscillators for the New York Stock Exchange left-hand panel, dead center straight away, NASDAQ Composite. Over on the right-hand side is the Dow. Now, the Dow got above zero yesterday. In fact, this morning, shortly after the market opened, we saw the New York Stock Exchange above the 150 level. Now, when you get above 150, it closes above the 150. That's the L line on my screen out there. I actually was starting to eat a little crow with regard to those words that I shared with you. And the reason is because, if at any point in time here in the very near future, we see the New York Stock Exchange price oscillator close above 150, I've got to come back and say, well, maybe there's something else going on here, something else that I didn't properly anticipate. Because when the New York Stock Exchange oscillator can get above 150, it is usually, and I do mean usually, like a high degree of usualness, googliness, right? That would the message would be higher prices are to come. Doesn't tell you how much higher, but that higher prices would be to come. Now, we're well below that now. And so, but what it did do for me is to say, something to think about. Well, more than something to think about. And I knew that yesterday we had really nice advancing issues. We had really nice advancing volume over declining volume. And in fact, this chart here, which is of the New York Stock Exchange, so this is what I had started doing a little bit of analysis just to understand today, just to try to tie in, this potential 200-point failure that we're looking at, 200-point, maybe more, inside the Dow. And yesterday's action, trying to really tie the two messages together. Why? If you take a look at the very bottom portion of my chart here, it just measures the single day advancing volume versus declining volume. That's all that it does. You'll see a blue little line on the very bottom of your screen out there. Yesterday's volume, advancing the volume versus declining volume, 7.51 to 1 out there. So really nice. And if you look at the chart on the bottom of my screen, you'll see we don't have volume like that inside the New York Stock Exchange that often. When I say volume, I'm looking at advancing versus declining volume. So a whole different concept out there. Maybe different concept. What we also had was a large net advancing issues. So it's advancing issues, less declining issues. Yesterday was 1803. That's pretty good market breadth, as you can see by the second panel off the bottom of my screen out here. So what I started to do was take a look at days where we had the same setup, above the threshold level in both instances, just to see what that typically should mean. That way I can say, hey, if that doesn't happen, something to think about. Now, if you take a look at the last few times that, if you come back here to the trading day, looks like December 17th. Yeah, December 17th. One such occurrence where we had, really nice advancing volume exceeding, from a ratio standpoint, exceeding declining volume, and net advancing issues, well outpacing, above the 1800 level out here. And you can see that was a signal of an initiation move. No question about it. Let's go off. Let's actually come a little bit further to the left out here. Back on the April 2014 timeframe. Same kind of pattern setup out there. And what did that lead to? Most definitely led to higher price. Now, I went back to start taking a look at this morning because when I saw the market open, saw the price oscillator for quite a while stay above that 150, I had to come back and say, okay, what is it that I'm missing here? Because what you and I are is just simply pattern specialists, masters of patterns out there. And if we can find the repeating patterns, if we can find those links, then you and I can solve the Rubik's Cube of the market, or at least give ourselves a high probability. So then if we fast forward to the most recent, or one of the most recent times out here was back in February 2015. Same kind of thing. Now, what was interesting about this session, February 3rd, 2015, is the very next trading day we had an inside day. Those of you that are longtime listeners know that when you have an inside session, it typically means, and I mean high degree of probability, the market's going to continue in the direction that it came from out there. So it's okay. You didn't have follow through. It's one of the few times where you did not have follow through to the upside after a day like yesterday. And if we now hold on a minute here, this little blue line out here, we saw quite a snapback rally right inside this New York Stock Exchange back on August 27th. But that certainly failed, right? That failed. There was no follow through. Slightly higher high the very next day, and then price came retracing. It didn't come tumbling down, but it certainly came back out here. So today's session not yet over, but quite frankly, if the candle were to finish like it is right now today, the message to me would be that, you know what, that prophetic, hey, if the Dow ends up being 200 points down, we've probably seen the high, and you won't be able to look back until February 16th. That prophetic statement probably turns out to be pathetic. That's if, in fact, the candle session ends like that. I'm not willing to totally give it up, but in fact, if we go back a little bit further in the chart out here, here's another situation or example back in April of 2014. Again, big volume inside the advancing issues versus declining issues, substantial volume, and then you had a nice net advancing issues day out here. We did have a failure back here on March the 5th, 2014, but all that really led to was just a bit of a consolidation, just a bit of a retracement out there. Here's another example back in October. Now, this makes sense, right? October 10th, 2013. We know about the big October bottom. Oh, that was October 2014. Here's the October bottom in 2013. No surprise there to any of us. So yesterday, the New York Stock Exchange. So what does that mean? And how do we play this? How do we master this out here? Based on yesterday's movement, even based on today, even with it giving up what it has, I think the real key here, how I believe that it should be played, is not until you see the New York Stock Exchange actually, its price oscillator, get down below zero, at least get to a lower high out here or something, which is not what we have that's in place here today. Not until we see that do we have any kind of signal that my prophetic statement really was prophetic. Because otherwise, this could easily turn out to be pathetic. Now, what we can also look at, though, is the Dow. Because we know the New York Stock Exchange and the NASDAQ Composite price stocks, they've been above zero for a while out here. While everybody's been confused about what the market's going to do, these have been above zero, saying, I'm not giving it up. I'm not giving up the ghost. I don't care what it is that they're talking about in the media out here. I'm not willing to give it up. Now, in the case of the Dow, yesterday was the first time that it spent any time above zero. If it does give that up today, if there's some kind of additional sell-off over the course of the next 3 hours out here, it says that buyers never have been in control inside of the Dow. In fact, last time that they were in control inside of the Dow was the high back on August the 18th out here. So this is what you and I have to take a look at. That's how we want to start our day, and taking a look and understanding what the markets are doing out here. The markets are flat. That means our decision making is flat as well. In my opinion, if I go take a look at what's going on inside of the VIX index out here, VIX index is actually pulled back to a level. If we're to close out right here at 2363, what you'll see the VIX index do is actually move down to 1983, at least. 1983 is the 50-day exponential moving average. And so that would also put some additional oomph or pressure from the buying side into the markets. If we take a look at what's going on currency-wise, we'll go take a look at ETF structure. I'll try to paste this together for you. I'm trying to stay logical here. Hopefully, this is somewhat logical for you. If we go take a look at, so we've gone from taking a look at the message of the markets yesterday inside the wider swath of the market, New York Stock Exchange. As you saw, my data that I had been researching only went back into 2012. I can go back, quite a bit further than that. But I saw what I needed to see to understand what was going on inside the markets, and so I just shared that with you as well. And we take a look at then, we like to look at the VIX index as really a liquidity gauge. I like to look at it as a liquidity gauge. Many different ways to go ahead and utilize the VIX index. You know that I like to take a look at it in relation to the 50-day exponential moving average. There's a couple other things that I shared in my VIX workshop out there last year that undeniably are terrific tools for trading and investing. When we get back from this breakout here, this commercial break, let's go take a look at what's going on in the currency world. Because in the currency world, could it be more liquid? Could there be more liquidity for us to be paying attention to, especially that euro, Japanese yen? Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 13. S&P is up 2. I guess the Apple event has kicked off, and it looks like there's a new iPod Pro 13 inches. Hey, do you remember your first laptop out here? Here's a picture of my first laptop, a compact, portable lap crusher. More so than a laptop out there. But I was one of the first, I believe, to buy that. Look at those two beautiful floppy disk drives on that. But I used to carry that back and forth from the house to the office out there in those days. That was back in 1983 when I purchased my compact, portable lap crusher out there. Boy, we have come a long way, have we not? In any event, let's take a look at what else is going on inside the market. Let's look at currencies out here. If we take a look at the Euro-Japanese yen. Now, the Euro-Japanese yen, I had thought that this was in an A to B equals CD to the downside, which would, if it, and it still may be the case, but at this stage here, we're going to say not so fast. Now, if this had been moving to the downside in A to B equals CD, that is what the sellers want to see, what the bears want to see, because when this currency pair moves to the southern hemisphere, it is sellers. It's bad for the markets out there. It tells you the liquidity is drying up simply because this is a carry trade vehicle out here. On the other hand, at this stage of the game, we're seeing price at least make a retracement of its last move. If we go measure that retracement right now, just simply from its high on the trading day of August 21st down to the low out here on September the 4th. It's above the 0.382 level. Says this can easily move up to 136.42 out there. That would put some energy in the markets as well. So this currency pair headed in the wrong direction for that what could be a pathetic call inside of the markets. We'll see. We'll see. Like I said, I'm not giving up on it just yet. If we look at other currency pairs out here, if we take a look at the euro versus the U.S. dollar index, or not the U.S. dollar index, but versus the U.S. dollar itself, we're seeing just kind of a flattish to a slight pullback out here. Japanese yen itself, with regard to the U.S. dollar, that's where we've got the big movement out here. What it looks like it wants to do is, this has held this little hammer candle from back here on March the 26th. So price found support at that hammer candle as the Japanese yen careened to the downside on August the 24th out here. Nonetheless, price may try to get back inside that little trend line that it had broken through on the 24th as well and find that area as its resistance level. Now, all of that, if we take a look at the mixture of the 6 currency pairs inside the U.S. dollar index, putting a little bit of strength inside of King Dollar, trading out at about the 96.27 level out here. What is it trying to do? You know, if you just take a look at, I don't know, can I trust this volume out here? We're going to give it a shot. If we take a look at the September 3rd level where it's trading into, it's got 46,000 contracts. You're at 40,000 contracts as we speak right now. So you're pushing into a swing point with volume. Speaking of swing points and speaking of Apple out here, let's go see what it is trying to do. It's up 37 cents, 41 million shares. So what Apple does have today is it's got the volume as it pushes into or attempts to push into the swing point here from the August 31st level. Now, the top of that swing is 114.53. The bottom of that swing is 112. Bottom of that swing is 112. So even if Apple closes below 112, it's pushing into a swing point with volume out there. And that says that it will at least go test that area again. Will it test the high, or will it just simply, if it closes below 112, or will it just simply test the low? That we don't know. What we do know is it's pushing that swing point with volume. If somehow, you know, at the Apple conference, Tim Cook pulls out some rabbit out of his hat, or better yet, if traders decide that whatever it is that he pulls out is a rabbit, and you see price get above 114.53, you know what you might have is an A to B equals CD to the upside, and a doozy out here inside of Apple. We'll take things one thing at a time. 114.53 is a key level for it to get above, and then 117.65, which is the weekly, that's the daily market profile high out there, and that is your levels of resistance inside of Apple. If we take a look at, let's go see, what else do we want to take? Let's go look at the ETF structures out here. So you got the Qs, the only one that is green at this moment, up 42 cents out here. The Qs have gotten above, at least intra-session, they've gotten above their swing point here from August the 28th. Now, that is 49 million shares. You've done 20 million shares. You are coming into that swing point light. If the Qs close below 106, even Steven, you're at 105.40. A true rejection of this swing, you need to see it close below 104.85. So that's really the number inside the Qs. Two numbers to be paying attention to. 104.85, that would be a complete failure. That would say it would be prophetic, the statement that I made yesterday. If you close above that level, light volume or not, it's not giving you a whole lot other than saying, you know, maybe you failed at the high, but not at the low. So you can test it again. Steve Rhodes will be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
As you come back, the Dow's off 42, S&P is down 4. We looked at the Qs. Let's go look at the other three, the IWM, the SPYs, and the Diamonds, get a feel for what's going on out here. Now, the IWM here has gotten above its swing point from August 31st. Volume on that swing, 29 million. You've done 21 million shares so far. So you've got pretty good volume as the IWM and the Russell 2000 tries to overtake that swing point, set up a small A to B equals CD to the upside. However, price has rejected that area. But as we talked about with Apple, IWM is moving into a swing point with volume. I don't know. I mean, it should be able to do 29 million shares over the course of the next few hours. You would think that it would be able to do that. If the IWM does not close below 114.76, hey, it's the same setup really with Apple. Whether it closes below the 114.76 level or not, you're pushing into a swing point with volume. So it doesn't look now. If volume is less than 29 million shares and you close below 114.76, you will have a failure on price and volume of its most recent swing point, the August 31st time frame out there. So that's what's going on inside of the IWM. Key is going to be, what does it look like at the end of today's trading session? Inside the SPY out here, very light volume thus far, 61 million shares. Now, it has not tested the top of the August 28th swing point. That high was 199.84. The low is 197.92. You're trading below that level right now. So, and on light volume. So, in the case of the SPY, a little bit of a diverging message here. We don't have synergy. That's right. That's the word, synergy. We don't have synergy across the board here. At this stage, the SPY is a failure at its swing point from August the 28th. No way is it going to get the type of volume at that swing, which was 160 million shares. So it's not going to do that. If the SPY closes below 197.92, its message is a failure of the swing point on price and volume. If we take a look at the Dow Diamonds, 3.2 million shares out here. The Diamonds pushing into a swing that have got 15 and 8 million shares. August 28th is the actual swing high. We'll make it the easy one, 8 million shares. Doesn't matter. It's not going to be able to get that type of volume today. If the Diamonds close below 165.42, you're 164.48, you will have a failure on price and volume. So you would have a failure in price and volume in the Diamonds and the SPYs today. The IWM just depends what happens over the course of the next few hours out here. And the Qs, we know that they also have light volume, but they've got to get quite a bit lower out there. Now, Apple could certainly help that occur inside of the market. So then what does all that mean? That says, hey, maybe it's not such a pathetic call yesterday with regard to that 200-point decline inside of the Dow. And here's a cool thing. Yeah, you don't even have to worry whether I'm right or not. If I am right, and the market's going to move down between now and at least February, before we see any kind of sizable bottom, you got a lot of time, so you don't have to pack your bags. You're not going to miss this. You're not going to miss this takeoff, in essence, to the downside. Now, taking off to the downside. Taking off to the downside is Goldilocks. Let's go take a look at Goldilocks. Down 1860 as we speak right now. Of course, those of you listening to the show know that gold has not been able to break through its trend line out here. In fact, that's where it ran into resistance the last time on any move higher. Little key reversal session on August the 24th. Now what we're seeing gold do is come back and test a swing point. So let's switch over, and as opposed to looking at the contract, let's do this so you can do it at home. Let's go take a look at the GLD out here. If we take a look at the GLD, the swing point that it's testing is July 24th. If we take a look at that, 11.5 million shares. The pullback thus far today, 5 million shares. So you're going to get a test of a swing point with light volume out here. Potentially a test of a swing point with light volume. Why do I say potentially? Because if the GLD closes inside of 105.59, underneath 105.59, you're at 105.71. Doesn't matter whether it's light volume or not. If you close inside it, says, hey, I'm going to go, I may go test the bottom of that swing, maybe even take it out. You don't know which one it would do. That would be at the 103.43. But you do know gold's pulling back in light volume. If I take a look at weekly market profiles, those are the red lines going across my screen. You're right there at that point of control where price is most comfortable on a weekly basis, coming back to a comfortable level and testing a swing point on light volume. The key number, the 105.59. If in fact gold fails here, continues to pull back, what we ought to see, if we go back now to the gold contract out here, move to at least the 1094. Now, the gold contract has also tested, by the way, its July 24 swing point. So we want, the GLD is, you're best to trade the GLD based on what's going on inside the gold contract. I just simply did that for you because the GLD is the underlying instrument, just simply because many of you at home, you can do the same thing and just gauge and understand when price is moving into a swing point, what its actual meaning is. But if gold closes out the session today below 1101.50, that says it's likely to go test the bottom, at least spike 1094.30, the 0.786 retracement inside of Goldilocks. If we go take a look at high-ho silver, back 17 pennies right now, trading out at 14.58. Actually looks a whole lot better than gold's chart does. It's still trading above yesterday's low. So if any of the metals are going to take off at this stage, you'd have to say that it looks like silver might be that one that would be taking off. So you've got a little dark cloud cover that has formed so far inside of the silver contract on a daily basis. But let's go take a look at the SLV. Let's go see what it is doing out here. Take a look at some volume. SLV is the ticker symbol. That's going to be your ETF. And if we take a look at the ETF, yeah, certainly nowhere near the lows. I didn't expect that. Let me get rid of this A to B equals CD. But let's go see what it's doing volume-wise. Very light volume today. You've done 1.9 million shares. You know, you could argue that the last swing point was out here on September 4th with 3.7 million shares. So, and you're right down at the bottom of the TAS Market Profile weekly box. The actual bottom number of that box is 1393 or 1394. Very interesting, as Schultze would say. No, he said, I know nothing. It's Artie Johnson. He's the one that would say very interesting. I know, I'll get it right. I'll figure it out in my head out there. So that takes care of really gold. So that we haven't looked at, hey, what's going on in some of the mining equities out here. Let's go take a look at Rand Gold Resources, off 56 cents. That's with 560,000 shares. What is it doing? It's light volume, but it's no good. It's no good. I like that. It's no good. You ever see my Big Fat Greek Wedding? Well, I think it's a great, funny movie out there, especially with Gus. You know, I don't know about you, but ever since that movie, I always carry around a bottle of Windex, you know, and if you've got a little sore, just spray Windex on it. But actually, I like the scene in there with the aunt, I think, of the bride out there. And she was talking about that one story where it's no good or something like that. In any event, with regard to Rand Gold Resources out here, Rand Gold Resources is number one, trading below 57.06. That's no good. That's no good, meaning that July 27 swing point. Now, that's got volume of 1.2 million shares, so you're trading below that with light volume. We also have a swing point, a newer swing point, a most recent swing point from September the 4th that's got 1.1 million. But you're trading inside that. Says to me that Rand Gold Resources wants to go test the low. The low of that is 55.66. You are trading right now at 56.44. So it looks like that wants some lower price. If we take a look at Agnico Eagle off a $1.23 as we speak, trading out at 21.43. That is trading into the swing point out here for the trading day of August 3rd. 2.4 million shares. That's no good. Yeah, if you next time you're watching my Big Fat Greek Wedding, you'll hear somebody say, that's no good. I believe that's what she says out there. And I will tell you, that's no good. That's no good because you've got AEM, Agnico Eagle, one of the better mining equities out here, trading into the swing point from August 3rd with volume. Already done 3.4 million shares. Has not tested the low, which is 21.07. You've gotten down to a low out here of 21.29. It's going to go test it. Maybe it takes it out. If it takes it out, that spells curtains out here, because then you could have an A to B equals CD to the downside. You certainly could have a maybe you already have that. No, you're not going to get. Well, I take that back. What I'm looking at is the trading session. The B point of an A to B equals CD is August 26th. Now that's got 5.4 million shares. You're below it, but you're below with 3.4 million shares. All depends on what the volume looks like today. But if AEM takes that out with volume, it's going to have an A to B equals CD to the downside out here. We'll try to check back in on that mañana. If we look at Goldcorp, now the one stock inside the mining sector that is up is FCX, right? And we'll just cover that real quickly again for you. You can see it's off its trading high for the day, but it's trading out at 1065. Of course, we know that FCX is like trading the Australian dollar. So let's go see what the Australian dollar is. Now, I might look like I have mud on my face out here. No, I don't have mud on my face. If we look at the Australian dollar, we'll look at a candle. Looks very similar to FCX, does it not? See, you'd say, hey, put up the Australian dollar chart, Stevie. You're just trying to, no, I've got the Australian dollar chart on my screen. That when you trade FCX, you're trading a currency pair out there. Nothing wrong with that, but that's what you're trading. And what you want to take a look at is, hey, what's going on with the currency pair out here? In this case, as we take a look at market profiles, you can take a look at those blue lines going across my screen. That formed today, new market profile, and that is where it ran into resistance at about 0.70835. So the Australian dollar's got to clear that. If it can clear that, then that's going to be maybe short to long-term bullish out here. Why do I say that? Well, I say that for the following reason. We take a look at these market profiles. Let me make it easier for you to see why I say that out here. Let's turn off the weekly profiles. Boom, boom, double boom out here. Okay, so now all that's on my screen, and let's turn off the channel line. Where is that? Where is that? Do I have that? That's a trend line. Yeah, I'm not going to worry about it. Forget about that green line. But just take a look at those blue horizontal lines going across my screen out here. Notice that we have not seen, I'm just verifying here, we have not seen price close above a daily market profile high in a long time. Certainly not since May the 14th out here. So May the 14th, we're now at September the 9th, several months. If, in fact, the Australian dollar can close above 0.70835. That'll be the first time that would suggest, hey, maybe, well, what it would suggest would be the following to you and me, right? We take a look at a trend line where price would travel to, I'll go ahead, I'll make this a green trend line. Oh, I guess I won't. Looks like it's a blue line out here. You know, price would travel right to about right there. That's where it would run into resistance. But that's, oh, man, what did I draw there? I don't even know what the heck what I drew there. That's pretty cool. I got an arrow on both sides. It gives me a percentage, tells me how many bars, what the slope is. Well, thank you very much, folks. I didn't even know I had that tool on my system. Nonetheless, we'll just take a look at the trend line and say that's where price would run into. If we can get over that, then that becomes even more bullish with regard to the Australian dollar, and that would mean even more bullish with regard to FCX out there. But know that the reason that it's trading higher is simply because of what's going on inside of the Australian dollar out there. Let's go take a look at so you're off 56 points. Boy, oh boy, prophetic, huh? Not pathetic, at least not just yet. Let's look at some stocks here that are moving and grooving with the next couple of minutes. Let's take a look at to the downside. See what we've got going on. Let's take a look at Chipotle. CMG is a ticker symbol, down a little over 1% off $9. I see what's going on there. I see a biotech that looks like it is imploded off 80%. So I hope nobody out there owns it. No reason for us to look at it. That's a really bad day. But if we do take a look at Chipotle, now what Chipotle has done is that Chipotle broke out with some nice volume behind the move back on July 22nd. That volume was 3 million shares. Price came back, tested it August 24th with 842,000 shares. So during the big decline out here, Chipotle ran right into support of where it had last broken out. Today, pulling back with 183,000 shares. So Chipotle is not falling apart by any stretch of the imagination and ought to have pretty good support at 69.40. I mean, if it couldn't bust through that level on August 24th, that's pretty good support inside of Chipotle, CMG being the ticker symbol. Let's see, what else do we have? We've got Flexion Therapeutics. Maybe that is in sympathy to Tetraphase Pharmaceuticals. They just announced some top-line results to one of their studies. Looks like it is not good for the bottom line. The bottom line is this is sold off 1.8. Oh, this is a weird-looking chart. This is not take a look at some of these high-volume spike days out here. Nonetheless, trading quite a bit lower with a huge volume for this equity, 1.8 million shares out here. Where is it headed to? I don't know. This is one of those stocks where you look at the chart and you just say, it's a schizophrenic stock out here, and no real good reason to be trading it. At least none that I can see. If you were trading that, you would be trading it because you believe in whatever it is that they're producing out there, the drug that they're producing. Let's take a look at something moving to the upside here, because we've got things moving to the downside in a relatively quick way out here. Apple just turned slightly red. But if we take a look at Clovis Oncology, CLVS, that's up 15%, up $13 with some nice volume behind its move. But when we come back from this breakout here, let's go back and check out the summation index. Let's go check out the price oscillators. Let's go check out let's go see what other kind of short-term patterns we might. Let's go take a look at volume and some trend lines. That's what we're going to do when we get back. Dow's off 63, S&P down 6. Be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow off 82, S&P down 8, composites off 8, Russell's down 6 points out here. So what do we want to, how do I want to do this? First thing, trend lines. Let's go take a look at the monthly trend here, specifically for the Dow. Of course, I should have caught it earlier. Here's the why we take a look at this trend line. Let me just explode the screen up here. Okay, well, this actually shows it. If you take, this is kind of interesting. If you take a look at the Dow and you just do a trend line from the 2000 high, So use the top of the 2000 high to the top of the October 2007 high. That's the green line going across my chart out here. You can see that price here inside the Dow today got up and tagged that level and gave it up. Look, I'm going to try to blow this up on my screen up here. There, you can see this. So you and I had drawn this in as a trend line. That is resistance. You see the red line that's on my chart out here? That's the red line of, people talk about death crosses and things of that sort. Forget about that. This is the cross that you're interested in. This is the cross that says the trend is over. So we saw the Dow close below that line last week. It's a weekly chart that you and I are looking at out here, and that's a trend going back into March of 2009. Now, when you break a trend line, what price likes to do, typically with price, what you like to do, bullish or bearish, is like to see price go test that area. In this case here on the bullish side, the bullish message would be price test that red level, that red diagonal line, gets back up inside it. In this case here, you'd want to see it get above that green line as well to say, hey, you know what? That stuff we saw a couple weeks ago, August 24th, way overdone, fat fingers, whatever it is out there, and price is going to resume and head all the way back up to the 18,351 level or even higher. However, if this area gets rejected, it's only Wednesday, so we've got a couple more trading sessions. But if we have another confirmation of a move lower out here, well, my interpretation, and I'm not going to, price projections, I just use simple Fibonacci retracement levels, 13,820, 11,021, with regard to off of the move from the March 2009 to the high here in May of 2015. So those would just be, price projection areas that you would take a look at. But for me, the message is even beyond that. It says that the market moves lower through February or April, sometime February, April of 2016. Out there. And it would say that the high that we saw here this morning, that was it. Now, not the high of the year, but that's the high. We won't see this high again. We won't see this high again. That's one of the tools that I'm taking that I've been following, that I've been tracking, that is really the message of the markets at this stage. Now, what blows that apart is if, in fact, price can get above those resistance levels that we just looked at. Now, why is that important? These trend lines, they work on all different time frames. If we go look at the 120-minute time frame right now of the S&P futures, what we're going to see, just a short-term trend line here, you're going to see that's coming off of these lows from about 2 o'clock, between 2 and 4 in the afternoon, September 4th. So last week, you can see that's like this little green trend line here. Price is right up against it. So the S&P needs to hold that level right now. If it does not hold that level, it probably comes down and tests the trend line coming off of the August 24th level out here. That's the secondary. That's the lower green line out here. Now, what we also saw, trend line wise, okay, we got to take it like it is. We also saw that what the ES did was it broke this little descending trend line. That was yesterday at about 2 o'clock in the afternoon. So price is coming back right into an area of potential support. If the ES trades, another 5 points lower than that, you're going to see the ES get down into about the 1929 level out there. That's odd. How did I come up with 1929? Hey, folks, stay tuned. David White is up next. I'll see you on Terrific Thursday. Have a great day, great afternoon. Take care.
The TFNN End of Summer Tiger Dollar Sale is here. We've just announced our best Tiger Dollar Sale is back for 5 days only. This week, you can get up to a 40% bonus on whatever you spend when you purchase Tiger Dollars. Tiger Dollars are the best way to lock in added value and extra savings for any of your TFNN products or services. Normally, we only offer a 10, 15, or 20% bonus, but for this week only, we've doubled all our bonuses and are giving away 20, 30, and even 40% bonuses on all Tiger Dollar purchases. Tiger Dollars can be used for any TFNN product or service and never expire. So whether you're a subscriber already or planning on trying out a product soon, now is a perfect time to get your Tiger Dollars. For more information and to purchase your Tiger Dollars today, visit the front page of TFNN.com for all the details. Remember, this sale ends Sunday, so act now and don't miss out.
You're watching TigerTV.